Welcome back to Closing Bell. 3 earnings today on the 26th of January. AMD, Microsoft, Lockheed Martin. This is what I will be covering on the Closing Bell tonight. And first, I want to start off with Microsoft. Microsoft, one of the most resilient stock before or after COVID, it doesn't matter. They're up 6% just now. And they have smashed. When I say smash, they have smashed the expectation. 2020, the growth rate was expected to be 12%, but they end up at 17% in that quarter. Okay, so as you can see, Azure Cloud has managed over 50% revenue growth. You know, all the devices, 14%, PC, Chromebook about 10%, Xbox up 40%. So their earnings 4.3 billion against 4 billion in this quarter, up 70% compared to 12% last quarter, and EPS of a staggering 2.03 versus 1.64. Wow! So it's Microsoft a stock to buy. But before I go there, let's go on Graham's Intrinsic Calculation. That's what I use. You can go to my website and click it on the link below. It's free to use for you guys just to help you on your investment journey. So I like to do my Graham's Intrinsic Calculation with new data. Okay, new data that we have got here. So the EPS now is standing 6.71 for 2020, the whole 4 quarters up to Q4 is 6.71. Okay, at the rate of revenue after you combine everything, it's about 14.4%. Okay, 44% for 2019, 2020. And if you put the numbers in, do you know what you get? You will get an amount of 359.20 on Microsoft. So, you know, I'm not saying that Microsoft is worth 360 just now, but I'm saying that with the new EPS and if they keep their growth running for 2021, I think we're looking at a very undervalued Microsoft stock, and they pay you dividends. So it's a great growing dividend stock that's in the tech and cloud sector. Okay, I'll let you make up the decision if you want to buy, because I think I'll buy some for my eToro account to beef it up a bit defensive and yet room for a good slow and steady growth. So next, I want to go to Lockheed Martin. Lockheed Martin, they missed their EPS, but overall Lockheed Martin combined EPS is 24.3 against the share price of about 250 bucks. So 24.3 EPS staggering. So, you know, the aerospace F-35 is up 5%, not much. You know, the missiles and fire departments up about 4% this year. You know, helicopter rotary is about 4.2%. But the one that I'm really watching, the one that's really, you know, attracting me is the space travel. The supplying space travel equipments, you know, materials. It's up 14%. And remember, Katie Wood is actually considering opening an ARC ETF for space. And Lockheed Martin may or will be part of the index potentially if they are a supplier to that sector. So Lockheed Martin looking really good, and also pay a dividend of 3.14%. Okay, so Graham's Intrinsic Calculator, again on my website here, 24.3 EPS, put it in. Okay, a growth this year, 2019, about 10.7%. Do you know how much share price will come out? 1,056.50. So we're talking about a 70% rise. But is Lockheed Martin really worth that much? So in terms of undervalued dividend stocks, I think, you know, I'm not saying that Lockheed Martin is worth $1,000, but I think Lockheed Martin, it's a good growing dividend stock. You know, it is not going to be explosive growth, but a 10% growth at potentially 9 or 11 next year, it is still a good value dividend stock to go into if you're lacking that defensive type sector. Okay, so that's me and Lockheed Martin. Again, I think I've already added on eToro. I might add a bit more on eToro to push it up to about 4 to 5% holding on my eToro account, because I think it's a good defensive, and yet there's room for growth and also a bit of a good value there. Okay, and finally, AMD. Boom. Okay, AMD came in for 2020 57% growth. Let me repeat, 57% growth. It broke on all quarters. CPU and gaming came in 176% growth for the year. And, you know, EPS smash 0.52 versus 0.47. Okay, and look at AMD in the beginning of the year. They were like on the floor of 0.15 or 0.2, and now they're 0.5. They're still growing. Okay, the cloud sector is growing, the gaming sector is growing, and now they've beaten Intel. They've pulled the margin down. Cannot complain. Revenue of 3.24 billion versus 3.03, so they smashed all record. And AMD, I even myself after hours, I bought some more AMD, about 93 bucks, and I've already owned AMD since the late 80s. I am already buying AMD, including with my Nvidia as my top 3 holdings, because I'm a strong believer of semiconductor stocks. But the only thing that you have to bear in mind with AMD, they said that next year 37%. Why? Chip sector. Taiwan Semiconductor, the biggest manufacturing partner, are really struggling with a lot of client asking, can we be in first in line? So this might push the supply down with a very high demand on these chips, especially with gaming, autonomous vehicle coming, and also Bitcoin mining. All this require this staggering chip, and also genetic editing requires this high performance GPU chip. So let's go into Graham's Intrinsic Calculation, but let's be a bit more precision. Put a 1.29 by 37% for next year instead. It's going to come 156.1. okay, this is not even accounting for the ceilings takeover that will close out next year. So this is me on closing bell. I am bullish on these 3 stocks. So this is me. I hope you enjoyed, and please tell me below if you own any of the stocks, or are you intending to buy, or if you have any questions on Graham's Intrinsic Calculation. Please just leave me a message. I will try my best to reply. So thank you, take care, and hope to see you tomorrow again for more closing bell, especially for Tesla, Apple, Amazon. No, Facebook, sorry, Facebook.